So welcome to Zon Beachside. What a great location this is to have the opportunity for us to get together once a month for the Senior Resource Center of Brevard meetings. We get the benefit of being in the lovely Nautilus Ballroom. I always call it the Lighthouse. If you're driving on South Patrick Drive and you see the Lighthouse, we get to meet in the first story of that lighthouse. And we've been getting together now. I guess this is like our third or fourth time together. And our whole premise as Helping Seniors of Brevard, we're the Florida 501c3 nonprofit that was established by Joe Steckler. I don't know if I've explained this before. Joe's a retired Navy captain. And his last command in the, in the olden days, he was out in submarines, commanding submarines roaming around the oceans. But in his later years, his last command in the Navy was he was in charge of the Navy's retirement home in Gulfport, Mississippi. And that is where he got kind of a lifelong love of advocacy and caring for seniors. And so when Joe and his wife, Terry, retired here to Satellite Beach, Joe couldn't stay retired, so he gets out and gets busy with the Brevard Alzheimer's Foundation, gets the whole thing going, gets everything started with what they call now the Joe's Clubs, which are the adult daycare facilities in 3 locations around the county. They literally call them Joe's Clubs to this day in honor of Joe's work, because that wasn't an easy thing to get all the pieces of that put together. So Joe retires from that, and then he still can't stay retired. So in 2011, he founds Helping Seniors of Brevard. So we're a Florida 501c3. Our speaker today, who I'm going to introduce in just a moment, was one of the founding board members. She was right there when Joe Steckler got the organization going and has helped every step of the way. She was instrumental in a thing that we're still active in today. With Helping Seniors, we do 3 things. For 10 plus years, we've operated the County Senior Information Helpline. It's that free call to 321-473-7770, 321-473-7770. We've helped more than 4,500 families free of charge since that date. Nancy Deerdorf, our operations director, is in charge of that. She's handling 300 plus calls per month. It has really been picking up as of late. Because if you think about it, Florida's a place that seniors are moving to, right and left. They always have, but particularly, I guess, as a result of pandemic and all that, everybody loves to come to Florida in a whole new way. So the population is growing. People are getting here. They don't know who to call, who to trust. The Senior Information Helpline is one way to do that. The second thing we do is a lot of education programs, and we do that. You can't pick up a newspaper without seeing an article from Joe Steckler. We publish in the Center of Senior Scene magazine. We do the radio and the TV, all in an effort to help you do something that we call getting your ducks in a row, which is all about developing an aging plan. And that is a term that Joe brought up from the foundation of Helping Seniors, because he said, Kerry, so many times people run into challenges that if they just had an opportunity to get a little bit ahead of the curve, they would have had more options. There would have been more ways to make the best of whatever that situation is. And so for 2022, we made the decision that that's kind of our theme of the year. It's called Helping You Get Your Ducks in a Row. And so we were fortunate to be able to come back to Zon Beachside and do this whole program, which we call the Senior Resource Center of Brevard Community Education Series. And right now we're meeting last Monday of every month, and each month we're trying to bring another, I would call it a chapter to it. So if you remember last month, we had Tyler Runte from the law office of Amy B. Van Fossen, and she was here talking about a checklist of items that you want to think about and have, because I have heard so many times from elder law attorneys about crises that happen in families. Somebody has a medical situation, and then the family is trying to do the best they can with it, not only being worried for their loved one, but also just trying to keep the lights on at home. And so the problems that come up if you don't have the right paperwork are pretty serious. And that's what she was trying to help us get ahead of the curve on the last month. And then this month we get to step forward, and I am really so excited because our guest today is Beth Courtney. She is the owner and wealth advisor with the Financial Cornerstone Group. And as I mentioned, she has a love for seniors. I told you 2 of the things that Helping Seniors does, the Senior Information Helpline and the media program. But the third, which is just as important, is advocating for seniors. I always tell the story, we're in a county, we love our kids. We love them so much that we wanted them to have the best schools possible. We voted in a 1/2-cent sales tax because we are that serious about helping our kids have the best schools possible here in Brevard County. The catch is we have less kids under 18 than we have seniors over 65. So the question is, who's out there advocating for the things that 65 plus needs? Nothing wrong with helping kids. We were all there, but we also got to look after our seniors too. And that's why when you pick up a Hometown News, you'll see Joe's articles in there. You pick up Aldea today, you'll see Joe's articles in there. Joe was always about this, and Beth was very instrumental. We founded a group called the Advocacy Council here in, I never can say that word, the Advocacy Council. And what our purpose is to make sure that all of our elected politicians and government help, because they are here supposedly to help us, right? That they understand the things that seniors are challenged with and trying to make sure they're aware of that. In fact, we all worked together and made a proposal to the county government about what's called an aging plan. So the county can figure out how to allocate resources that are going to best help seniors. But so we're so grateful for the friendship that Beth has had with helping seniors over the year. I also want to acknowledge another one of our board members who's here today, Karen Wernland. With your company is Emerald Care Management. Am I saying that right? And Karen has been a blessing. She's helped us through all of these efforts, but we can't do what we do as helping seniors without the help of people who get behind the work, both in terms of as a nonprofit, helping us do the fundraising, but also helping be the arms and legs of it as we try to reach out, because we have 650,000+ people in the county, of which fully 25% is over 65. And if you use AARP's definition, it's half of the county. So we always say you're a senior, love and care for senior, God willing, you're going to be a senior. But today, back to our community education series, I'm really excited about this because Beth put an article, if you didn't get a chance, pick up a copy of the Senior Scene magazine, because her article is in there in this month's edition, which we said, let's talk financial. And she puts together 5 ideas you can use now on your financial checklist. And these are practical items. So without any further ado, I'm going to turn the clicker and the microphone over to Beth Courtney. Come on up, Beth. Thank you for being here today.
Thank you very much, Kerry. Honored to be here, and I think we'll have a little fun together today. So as Kerry mentioned, they had invited me to put together an article, and gosh, there are way more than 5 things, just so you know. So I had to narrow it down to 5 things that really should be on every financial checklist, and so we're going to go through those today. I gave you some folders just as support information for later if you're like, what did she say, or how do I use that? You have those items in your folder, and you are welcome to call with any questions if you have any. So the 5 things begin with the B word. Not the B word you're thinking. I know what you're thinking. Stop it. It is budget. And you'll notice that I used another B word as well. It's called boss. A lot of people hear the word budget and they're like, oh no, not me. Nope, I'm not that person. I don't do budgets. I don't keep budgets. No fun, no fun, no fun. And believe it or not, I used to be you. That was me. I thought it was a pain and just trying to upkeep it. And you know how you procrastinate about things that you think aren't going to be fun? And I accidentally started teaching Dave Ramsey's financial piece like 15 years ago because the pastor of my church said, we have 50 people. I need you. You're going to lead a group. I'm like, I haven't even taken the class. But anyway, it was super helpful because it really gave me a different perspective. What I really understood was until then, my money was bossing me around. You have money left at the end of your month, or you have month left at the end of your money. If there's money left, what do you do with it? What happens to it? If you don't have a budget, it disappears. So the idea is to actually be the boss of your money. Let's see, I'm gonna get used to the clicker thing here. Okay, so what you'll see in your folder, this is only half of it, but I'll just give you the concept behind it. It's called a zero-based budget. Does that sound familiar to anybody? Here's the idea of a zero-based budget. At the top, everything that comes in every month, the actual cash that comes into your bank, not your gross paycheck, but what physically makes it to your checking account, after you have your withholdings and that kind of thing from your payroll or from your pensions. Then below that, you start putting the expenses. And what happens is, hopefully, the number from the top green line is bigger than the expense line. And if that's the case, you have something called a net discretionary amount. Net discretionary means what I took in minus what I put out, there's actually something left. And this is super simple, the whole concept behind it is instead of letting that money just disappear because you hadn't given it a name, give every dollar a name. So anything that's down here gets reassigned up here. So you can play with it, make copies of the budget template, but basically you're going to put some money maybe in savings, some money in vacation. There's a fun money spot. Everybody should have fun money because it's kind of like if you're on a diet and you never eat a brownie, you hate the diet, you're going off of it. If you do the budget, give yourself a little fun money, planned money that you don't get to argue about or anything. As long as it's legal, moral, and ethical, you get to use your $50 a month however you want and don't have to answer for it, and it makes you feel like you at least get a little fun out of the budgeting process. Any questions? This is interactive, by the way, so feel free. Okay. Actually, this is just a picture that you can get online. So lots of different organizations like Financial Peace University offer kind of suggestions for how much maybe you should be spending on your budget. You can just check online. There are several different opportunities there to kind of talk about that. Okay, number 2, build an emergency fund. Have you ever heard that concept before? So here's the thing about an emergency fund. Dave Ramsey likes to say that Murphy knocks on your door when you don't have an emergency fund. Oh, your water heater went out. Oh, your air conditioner went out. Oh, your roof needs repairing. Those things happen when people don't have money in the bank. So the idea is to build an emergency fund, and usually you want it to be equal to about 3 to 6 months worth of expenses. Not income, but expenses. The idea being, what if you didn't get to work or didn't have your income or whatever for a few months? It would give you time to handle emergencies instead of just scrambling. So it's kind of like the idea behind that. And usually the recommendation, 3 to 6 months, you actually get to kind of decide for yourself. Now here's the big question. Since banks are paying so much money right now, oh wait, no, they're not. It's kind of frustrating because people feel like their money isn't working very hard for them, and it's true, especially with the current inflation rate. It is not really fun to be dealing with the inflation rate and making 0.06% on your money. So most of the local banks are still in that range, 0.06, 0.08. I mean, so negligible you don't even really notice that you actually got any interest. So one of the things that we've been recommending to people, if you're comfortable enough with putting money aside and just really not needing it within a 2 to 3 day warning period, what you can do is you can actually do what's called an online bank, a high yield savings account. So we actually recommend that you Google high yield savings account, and you can actually see that there are rates out there right now. It's so pathetic that I'm excited about this, I gotta say. 0.65%, woo! That is not a ton, but it's a lot more. If you have any sizable amount in your emergency fund, 0.65% makes a big difference at the end of a year versus 0.06%. So, and the way that they work is you go online and you register. It takes maybe 5 minutes. Don't think of it like the normal bank because it's not brick and mortar. You're not walking into this building and taking money out. You're not going to an ATM. It's actually your reserve tank. So only put money out there that you could wait 2 or 3 days to go back and retrieve. But some of the banks, some are Chase Bank, some names that you know really well, some names that you might not know, like Marcus by Goldman Sachs, Synchrony. It's pretty competitive right now. And the one fortunate thing about the unfortunate thing that's happening right now in our economy is that rates are rising. And so as a saver, that actually works in your favor. So you'll notice that the banks are really out there trying to compete for your business, so they're starting to offer larger rates of return. So it's worth a shot. Like I said, keep enough in the local bank that you can make it if you have an emergency, but then let the rest of it grow at a much better rate of return and then just move it back. One little tip, this may fall in line with something Tyler might have talked about last month, But when you open an account online, make sure that if they don't voluntarily ask you for your beneficiary, you voluntarily go look online to find, how do I add a beneficiary? One of the things that would happen otherwise is if you, let's say you've got $10,000 in your online savings account and you didn't name a beneficiary, and all your other affairs were completely in order, but that one thing didn't happen, and you moved to heaven, that could become a probate asset, an asset that has to be probated. So just always make sure you have beneficiaries listed on any accounts that you have. Any questions? All right. Okay, this one's fun. Build a diverse investment portfolio. Diversifying your investments. So when you, well, actually I'm going to skip, I think the next slide tells you, yeah, okay. So when am I ready to invest? When does it make sense to invest? I really prefer that people first have their emergency fund in place because, again, you don't want to be in a situation where an emergency happens and you don't have enough cash to get through. It could happen at a time when the market is not behaving very nicely, kind of like all of 2022 so far, and you wouldn't want to be needing that emergency money and pulling it out of an investment that has actually fallen. So you want to really make sure that you have your nice, safe, risk-free money there for reserve, and then the investing is the money that you use after you've already preserved that. So a couple rules of thumb. How much should I invest? There's a range of suggestions, but typically 10 to 15% of your income is a really common number to be investing. Obviously, if you have excess beyond that, you may want to go further than that, but especially about 10 to 15%. And then here are the things that you need to think about. One of the things that you'll find in your folder later is a risk tolerance survey. So important. When you're going to invest, and whatever suggestions you get from everyone on the planet, your situation is your situation. Your risk tolerance is your risk tolerance. What you are comfortable with, risk versus reward, is your story, not what someone else says, oh, this is what worked for me. It's what works for you. So the risk tolerance, more risk equals more reward, less risk equals less reward. How much can you stomach if the markets are volatile? Then the time horizon is how long is that money going to be invested before you touch the money? Those two answers really help you understand where you should go with your risk tolerance and your time horizon. It could be that you might be risk averse, but if you know you're not touching that investment for 10 or 15 years and you need growth, you might go a little bit outside of your risk tolerance, or you might not. So it just depends. Oh gosh, what types of accounts? So have you heard the term, don't put all your eggs in one basket? Good old God's and Grandma's advice. Don't put all your eggs in one basket. So the idea is any of your money can be invested in any way of all the options that are out there. Certain rules might matter. So for instance, if you have money in what's called a tax-deferred investment, which might be like an individual retirement account or a 401k, there might be certain rules about when you can take it out according to Uncle Sam and follow those rules so you don't pay a penalty or you know you're going to pay taxes. But how you invest the money could be the same across a bunch of different types of accounts. So one of the things, we kind of like to look at your overall assets as a pie, and then you're going to assign different risk to different slices of the pie. So for instance, if you had a taxable account, that's going to be not an IRA, not a 401k. That's an account where you put money in, and it grows, and the growth on that money is subject to capital gains tax. Lots of little rules there, but the bottom line is you'll never pay taxes again on the money that you put in, but you'll pay taxes on the gains. If you think you're going to use that money sooner, you're probably going to be more conservative. If you think you're going to use that money later, you're probably going to be more aggressive. IRAs, very often, that is something that you are planning for a very long time. Maybe same thing with a 401k, probably would be more aggressive. If you're more aggressive, you're going to have more of a concentration in things that are more like stocks. If you're less aggressive, you're going to have more concentration in more things like what are called bonds or alternatives. Stocks are the riskier in general. Bonds are the more conservative in general, just to kind of give you an idea. You want to find what part of your overall portfolio should be protected and what can be a little bit more aggressive. And a lot of that's going to be based on how soon or how late you think you're going to touch the money. Make sense so far? Probably anything that's out in the market is really going to be subject to the volatility of the market. So if you ever see a chart that shows going back to the beginning of the market, it started down here, it does this, but it still is going up. It's called a mountain chart because it's still going up. But when this happens, it feels like this in your life. So you have to be prepared for it and diversify enough that you have a bucket that if you needed to get money, you take it from that more conservative bucket when the market is doing this to your more aggressive bucket. It's just having enough diversification. Any questions on that one? Okay. So number 4 is save taxes by learning effective tax strategies. How many know everything there is to know about taxes? Me neither, but we work with a bunch of CPAs. We work really, really closely with our client CPAs because kind of what I said earlier, each person's story is unique. Oh my gosh, you hear things all the time. Well, my brother-in-law said, or my sister's cousin's boyfriend's daughter said. I'm like, okay, but let's look at your situation and what impacts you. A lot of people don't really understand kind of how the tax system works. I would say most people don't. So it's been a little bit of fun for me over the years to be able to show people just a little bit of detail about how the tax system works. And actually, I'll show you a tax table in just a minute. Actually, I think I'll hop ahead for that just a minute. Okay, I'm going to do it. We're going to have some fun. When someone says, oh, you're in the 12% bracket, what does that mean to you? That you pay 12%. Now, the assumption is that I pay 12% on all of my dollars. But that, in fact, is not reality. We actually have a tiered tax system. So each different tier assigns a different tax rate. So in the end, you're actually paying a blended rate, a combination. So I'll give you just a couple things to look at there. It's in your folder. You can look at it whenever you want to. But the top left, if you're married filing jointly, what you see is that the first $20,000 is taxed at 10%. The next 63 is taxed at 12%. The next 95 is taxed at 22%, and so on. So you get the idea that what's happening is you actually pay a blended rate. So if your last dollars fall into the 22% bracket, you're not paying 22% on all your money. You're paying 22% on the last dollars. So your blended rate might be 18%. So it's really good to know that going in when you're making decisions about what I might cash out, how much might I take from my IRA or my 401k, how much of a capital gains experience might I have. It's good to become educated about these things so that you don't make mistakes that you wish later you would have known something about. So it's really just like even that one simple piece of paper in your folder can really help open your eyes to the process of how it works. A couple other hot dots on here. One is up there where you see standard deductions. So right now, we are under what's called the Tax Cuts and Jobs Act. It was implemented January 1st of 2018. It ends December 31st of 2025, so go get them. It actually put us in, I know it doesn't feel like this in real life, but it put us in the lowest tax environment we have been in decades. So we're actually paying less in taxes right now than we've paid prior to 2018 for decades. I would submit to you that when it sunsets, December 31st, 2025, that's probably the last time most of us in this room will see it this low again. That would be my guess. It was a few decades before we got here, and it could be a few decades before we get back here again. So it's really, I mean, it sounds terrible to say, but it's kind of a great time to be paying taxes. Because, again, lowest rates, what we believe, we already know that that is going to reset January 1st of 2026. We also believe that because Uncle Sam's been writing a lot of checks lately, if you haven't noticed, we do think that that's going to come to roost in later years. So we're really trying to help educate people on how that works. So just a really quick note, one common, actually, I'll go back there in a minute. I want to say one more thing. That standard deduction is higher. You probably noticed in 2018, all of a sudden it was like, oh my gosh, I get to write off all this money. I don't even get to itemize anymore because the standard deduction is so big. That's a good problem to have. If the standard deduction is higher than what you can itemize, that's a good problem to have. So when you're looking at that paper later and you want to see where you fall, you take your gross income minus your standard deduction to figure out where you fall on that chart. So it's kind of those top couple things there are super helpful in you figuring out where you land and how much room you might have to go if you want to make some decisions. All right, I think I'm going to go backward. Okay, great. All right, so understanding how the tax table, you don't have to be a genius and you don't have to be a CPA. Just that piece of paper alone kind of spells out kind of what it looks like. But I highly recommend that you work with a CPA if you're going to do anything taxable. As an example, one of the things that a lot of our clients are doing right now, they've accumulated a bunch of money in the tax me later bucket, which is your IRA, your 401k. Back in the day, all of us said it, oh, save taxes today, and then when you're retired, you'll pay less in retirement. And no, not necessarily. Not if the tax rates are actually higher. It may not be the case. So we're trying to help people start shifting money from the tax me later bucket to the tax me now and tax me never again bucket, which means they're going from a traditional IRA to a Roth IRA. To get from point A to point B, you've got to pay the taxes on the way, because Uncle Sam has been waiting for you to start spending that money that you've been building up in that bucket, and he wants his taxes. So if you're going to take it out of that bucket and move it to a Roth, which grows completely tax-free, he's going to tax you on the way. So it's just one of the many things you can do to really try to be tax efficient, meaning just make some really great decisions with the money you already have, especially while we're in this very rare window of time during the Tax Cuts and Jobs Act. So lots of complexities there, but just high level, there are opportunities if you work with maybe a CPA, a good accountant that can help you figure out, well, how much could I move and how much would it cost me? And now, once it's on the Roth side, when you put money in a Roth IRA, you're putting in already taxed money, so Uncle Sam can never touch that money again. And the lovely parting gift is that because you paid taxes today, Uncle Sam says, thank you so much, I am not going to charge you taxes on the gains. So if you have $10,000 over here, and 10 years from now it's $20,000, and you go to pull money out, not a penny of taxes. With the IRA, grows, if you have $10,000 here and it grows to $20,000, and you go to take that money out, you will be taxed at whatever the then current income tax rate is. So it's very well worth just exploring your options, just to see if it's a fit for you to do some more tax efficient decision making. One of the things I mentioned was that it would be good to find great books. One book that I love, I get nothing from this, so this is not, and it's not a paid endorsement, it's just, it changed our practice. It's called The Power of Xero. And it talks about the fact that there are some steps, just like what I mentioned, there are some steps that you could take to be more tax efficient. And one of the reasons you might want to do it is because if you don't have too much money in this bucket, which is the bucket that Uncle Sam makes you draw from at age 72, whether you want to or not, he's going to make you take it out because he's been waiting. He's like, listen, I let you grow that money all along. You never paid a penny of taxes on the money when it was going in. So I'm going to tax you on what you put in. I'm going to tax you on the gains. I can't wait any longer. You're 72, start spending. They're going to make you do that. Well, if the less you have over here, the more you have over here, it's possible that you could actually work your way into the place where you aren't even paying taxes on Social Security. That is not the case for everyone. Certainly people with pensions, it's really tough to get there. But a careful planning with your professional, with your CPA, could really help you figure out how you might be able to get out of paying taxes on your Social Security or pay less taxes on your Social Security. And listen, I love our country. I feel super blessed to be here. Render unto Caesar that which is Caesar's. I am blessed to be a taxpayer and then live in a free country. But if there are rules out there that you could legally, morally, or ethically be more creative, the rules are made to do so, then why not learn about them and embrace them? Because you can use your money to be giving in other ways, other than the IRS, because we can't control what they do with it. Anyway. Let's see. Okay, yep, I mentioned that. All right, let's see. We are getting through there. All right, take advantage of technology. Wow, we're already at number 5. Take advantage of technology. Have any of you guys ever used an app on your phone for anything? Just a little phone app. Okay. Have you ever used a budgeting app? All right. One of the things I put in there was a little article I found online with some different opportunities for actually using an app to manage your budget, your spending, your cash flow, whatever. So for instance, Dave Ramsey, Financial Peace, he has something called the Every Dollar app. Now you can go as far or as not far as you wish using technology. I completely understand the concerns that are there, just about security and safety. The one thing I would say is if you bank online already on your banking, it's already out there, and if someone actually hacked your bank, they could actually transact something. But on the budget apps, it's a viewer. You're just seeing what's leaving your account, because you can hook up your checking account to it and your savings account to it and your credit card to it, but you're just seeing the transactions that happened, and you're getting yourselves more aligned and more on task. If you don't want to just do the paper one, if you'd rather do an app, you can actually use the app and keep yourself apprised of, oh, I was supposed to spend $300 on groceries, and I'm at $375, and it is week 3. I'm going to raid my cabinet and my refrigerator. No more shopping, no more eating out. So it's just a way for you to be accountable to yourself, and maybe you realize after a few months, like, oh, I might need to change that category because I think I'm always going to go over. But this one, I can cut back on my phone or my cable or whatever it is. It's just a great tool to help you stay on top of your finances, and the fact that it automatically feeds in from your checking and savings means you're not doing all the manual work of saying, oh, what did I really do versus what I said I was going to do. So again, you can use the paper document. If you shoot me an email, I can email you the Excel version of the one that's in your folder. But also that list is in there of all the different apps. Mint is a real popular one that's been around for a long time, but there are several out there. I think, there are a lot of resources, and you have to pick through and pick what's safest and what works best for you. But I did try to give you a couple of tools there to kind of help you understand that. So let's see. That's what it looks like in your folder. Okay, so where do we go from here? So we just talked about 5 things. Like I mentioned up front, there are 1,005 or maybe 1,000,005 things that you could do. But this is just kind of kickstarting the process for you to just start thinking about taking control. That's really what it's about, is just taking control of your finances. It really was a light bulb moment for me when I realized, when I started to understand the concept of being the boss of my own money. Like, it hadn't occurred to me that my money was my boss. And it made a huge difference, and just telling it what to do is very empowering, so it's not as boring as you think. Okay, so one step at a time. If you've never done a budget in your life, you're kind of hating me right now, but just trust me, just play with it. It doesn't have to be perfect, you just have to start. And you might fail a few times, a few months, maybe the first year, but just continue to go without giving up. Carve out time in a peaceful place. We're on such a rat race track all the time that we can always say, like, oh, I got to get to that. Oh, I got a budget. Oh, I really need to get a hold of my finances. But we're just so busy. You have to make a date with yourself. Be very, very intentional. Carve out time for you or you and your spouse to actually go through these things. And it's so enlightening. I really can't encourage you enough. Be honest about where you are, and don't beat yourself up. Yesterday is history. Doesn't matter what happened before. Today is a new day, and today is when you start getting a hold of it. It's completely fruitless and not at all productive to spend time beating yourself up. New day, new plan. I mentioned about the available tools and resources. I mentioned about the emergency fund. One great way to get a handle on your budget is to get rid of debt as much as possible. The dollars that you were paying on debt could now start going into the Bank of You instead of Bank of America or wherever you've been paying bills. Seek expert advice. Evaluate your progress. Inspect what you expect. Again, you might make adjustments, but inspect what you expect. And again, begin today. Don't dwell on the past. And I have one last tip, but I actually think, I'll bet you Tyler covered this last time, but I'll give it to you as a reminder. So check the titling of your current accounts. I am super, super blessed. My niche in my practice is I work with women who have lost their spouses due to death or divorce. And almost to a person, I find that their accounts were not titled properly. And it's critical, again, I mentioned earlier if you did an online savings account, I mentioned that you need to name a beneficiary. Cannot stress the importance enough. If it's an investment account and it's not an IRA, IRA is already you name a beneficiary. Life insurance, you name a beneficiary. 401k, you name a beneficiary. But people seldom think about it for the banking. We don't even let people open an investment account without naming a beneficiary because we don't want them to end up in probate, their loved ones to end up in probate. So TOD is transfer on death for investment accounts. POD is payable on death for bank accounts. If you've not already done that, do your loved ones a favor and go down to your bank and tell them you want to add beneficiaries to your checking and savings account. Really, really important. Oh, here's a good one. Check all the beneficiaries on your life insurance and your IRAs and any of your accounts. We had a really strange series of things that happened. My first client, her father had moved to heaven, and both of his beneficiaries had predeceased him. So that got caught up in probate. Meanwhile, my client got cancer. She wanted to name her husband as beneficiary, but she still didn't have the assets yet, and then he had cancer. So I ended up helping the grandson, after all was said and done, get through 3 different probate seasons because of that first one not being handled, not being maintained. So definitely check. Sometimes an ex-spouse is still on a beneficiary designation. We don't really want that. So anyway, and then just again, probably to dovetail on what Tyler probably said, is make sure that you, in addition to seeing a CPA, I highly recommend that you see an attorney. Estate planning attorney, and make sure that all your ducks are in a row. So, any questions? And if anyone's interested in a book, I have a couple of extras, so you're welcome. Thank you very much for your time and attention. Appreciate it.
Thank you, Beth, so much. So, what a great book, The Power of Xero. I'm looking forward to reading this myself. And I was going to say, if you didn't get a chance to get your Senior Scene magazine, and viewer, if you're looking at this, you can check this out online. You can go to seniorscenemag.com, or you can go to helpingseniors.brevard.org, and you'll find our newsletter, which we always jokingly call it the Yellow Pages because it has this distinctive yellow border around it. And you'll see that some of the things that Beth was talking about today, here's her article in this month's edition, which is, in fact, all about let's get your ducks in a row. In this case, we used a little piggy bank because I guess we still do that for money, right? So I want to thank you for sharing that information. Was that good? It's always good to have these reminders and things that you brought something for me that I hadn't even thought about when you were going through the list of things to do, because I've heard it said so many times about people. You do things, particularly we talked about this at the beginning of the event, how people are moving into Florida. And so they may have had a really good attorney or financial planner set things up in another state. Then they come down here, but it was like 20 years ago they did this, and there's been life changes. People have come, people have gone. Sometimes the rules are a little different. I've understood that from attorneys. They can kind of try to make it fit, but it's a whole lot better if you get set up the right way given Florida, because we have some unique things, right? Typically, we don't have Florida state income tax, which is a big thing up north. So there's so many things, and I want to encourage you to chase down on the things that we're teaching about today, because it's going to be part of getting your ducks in a row. So remember, we visit at the last Monday of each month right here at Zon Beachside, and I wanted to, let me see if I can. We want to thank our friends here at Zon Beachside for just making this available to us. And what we're going to do, since Beth has helped you save all this money and going to continue to help you save all this money, we're actually going to have fun well, not that this wasn't fun. let me say this the right way. We're going to have extra fun next month because we're going to have Chris Morse. Chris Morse works with us on the Helping Seniors Travel Club. And one of the things that we have talked about in our getting your ducks in a row is, what's the old saying, all work, no play, makes someone a dull person, kind of thing. And that's what we want to do. One of the things when we did the advocacy, and you'll remember this, it's online now. You can take it if you haven't taken it, the Senior Resource Survey. And what we ask you to do is to fill out that survey and just help us remain aware of what the top needs in our county are. And some of them, it's interesting. I think it was when we had started the advocacy group, more than ever, it's about affordable housing. More than ever, it's about transportation. More than ever, it's still about legal questions and financial questions. But I'll tell you one that surprised me the first time it came up, because I wasn't expecting it. It was about isolation, that seniors in Brevard County wanted opportunities to get together and do things that were fun. Okay, something that gets them outside of the house and doing something different that's not normally in the process. And if you think about it, we all went through COVID. So for, it was originally 30 days, let's stop the spread, but it's 2 years later, and we're just now moving back to some level of normalcy. So it was interesting because about 2 years ago, Chris Morse came to us. He said, I'd like to put together a travel club. He's got a lifetime of experience. He's been a travel agent since the 1980s. His background is such that he's actually what they call a special needs travel agent, which means he's certified, like you need oxygen, you need other things when you're traveling. He's aware of how to work within the travel system. So he helps people who didn't think they could travel anymore travel. And so he said, Kerry, I want to come to you with this great idea. Great idea, absolutely the wrong time. He said, let's form a travel club and we can do some cruises. He said, I'll negotiate with the cruise lines that they'll actually give money back into helping seniors, so it'll help the nonprofit. But he said, wouldn't it be great if we could have people from all over Brevard County get on a cruise ship together or do travel together? Because so often, if you travel, you meet people and they become lifelong friends, but you end up keeping up with them on Facebook or in the old days by postcard. And here, when we get on a ship out of Port Canaveral, we have a great time meeting new friends and say, let's have lunch next Wednesday. You can meet people and do that. So it took 2 years for us to get there, but we did have our first ever Helping Seniors Travel Club cruise last October. And we had 50 people from all over the county come and join us, and we're now all great friends. So Chris is putting that together for the fall. We're going to talk about that. But even if you do independent travel, like I want to do this, maybe go out to see some places out west, or I want to travel internationally, he's equipped to do that as well. And so he'll just talk a little bit about travel in your senior years. So that's what's going to happen next time. And so really want to thank you for being out here with us today. We always promise to keep these to 55 minutes total, so we're going to stop on time. They did bring coffee and snacks, so please, you're welcome to stick around, talk to Beth, ask questions. We're here to help. We're here to serve you. We're just so appreciative that you took the time to come out this morning, and we'll look forward to seeing you next month on the Senior Resource Center of Brevard event. See you then.